Okay, guys, so now we're going to go ahead and talk about the 0.707 level. And let me just go ahead and pull up a retracement so you could see what I'm talking about here. So let's take a look at this retracement right here where we have a downside move and we're tracking the retracement back upward. First, if I go ahead and pull this out here, you'll notice from relative high once again to relative low, going from left to right. And as we talked about in the last video, if we can get that candlestick close above the 0.382 level, it's very strong opportunity to play to the 0.618 level. Now, if there is some strength through the 0.618 level, we could potentially look for a full reversal play. Now, where that move confirms is if we get a break above the 0.707 level. Where the importance of the 0.707 level comes from is 0.707 is equal to half the square root of 2. Now, the square root of 2 is also going to be another important level, but think of the 0.707 level as the pivotal point in a retracement, meaning if we can break above the 0.707 level, it's very likely that it goes to the 1 level. Likewise, if we are unable to break above the 0.707 level, it is likely that we see a reversal back to the downside if we're tracking a retracement like so. But anyway, since it's likely that we're going to see a move to the 1 level if the 0.707 level is to break, a very strong trading opportunity occurs when you get a candlestick close above the 0.707 level. Notice we actually see a candlestick close above the 0.707 level. We get a mini bit of a bullish flag right here. And that is, of course, going to be a continuation pattern. And you can go ahead and take an entry when you get that candlestick close above the 0.707 level and play it directly to the 1 level. We're going to talk about more price targets that you can use for the future if you do get that candlestick close above the 0.707 level. But remember, we are looking for those high reward, low risk opportunities. And when you get a candlestick close above the 0.707 level, it is very strong of an opportunity for it to go to the 1 level. Now, this 0.707 level is even strengthened and has higher probabilities of seeing a move to the 1 level when you have signs of continuation at this level. Notice here, we found support along the 0.707 level in such a sense that if I go ahead and zoom in and draw some trend lines on what is occurring along this level, you'll notice that we, of course, got that bullish flag that we mentioned. And this is going to be a continuation type pattern. So when you are seeing a continuation type pattern at the 0.707 level, it is very strong and high probability that we see a move to the 1 level. So definitely look out for those. And if you go ahead and see those, then you can go ahead and take an opportunity to the upside and play that move to the 1 level. Same thing here. Whenever we get a fast drop like this after seeing a strong upside move, we can identify if that move is to actually go ahead and reverse back upward or continue back downward by using the proportion of the 0.707 level. Notice if I go ahead and take a retracement of this move, you'll find we first found support at the 0.618 level. There was not many signs of reversal at this level, and we actually did end up breaking through this level. But where the downside confirmed is when we got that candlestick close beneath the 0.707. We got this candlestick close beneath the 0.707 level, that retested and found resistance now at the 0.707 level, and then it moved directly to the 1 level. This is once again showing how strong of an opportunity it is to play a continuation of a reversal when we do get that candlestick close below the 0.707 level. Basically, this is how I would, if I'm trading in real time, this is how I'm identifying where to enter and see if I can play a continuation back downward. If there is a candlestick close beneath the 0.707 level, go ahead and take an entry to the downside there, and then play that directly to the 1 level. Let's take another look at one of these moves. First, we have this downside move that occurred after this consolidation period right here. And if I go ahead and just draw out a Fibonacci retracement from relative high to relative low, you'll notice first that we find that resistance along the 0.618 level, which can be seen over here. We have the 0.618 level. And then when we get that candlestick close, if I go ahead and zoom in over here on this green line, you'll see that we get that candlestick close above the 0.707 level, did break up for a second, found support along the 0.707 level, and look how clean of a move we see to the 1 level. This is a very strong opportunity to go ahead and take an upside move. And this is just showing you once again the power of the 0.707 level in terms of it being a pivotal point in the market. The rule pretty much is if you can get that candlestick close above the 0.707 level, there is some strong probabilities of it going to the 1 level, which is this gray line up here. So you can actually collect on the difference in between. If we take a look here, it closes above at around a price of 1500 and then goes to a price of 1600. So allowing you to basically collect a 100-point difference there. Also, taking a look at the 0.382 level that we mentioned earlier, you could play the same thing there. So basically, what you're doing is you're playing from the 0.382 to the 0.618, holding off between these two levels. And then if you can get that candlestick close above the 0.707, then you're looking to play from the 0.707 all the way to the 1 level. Since the 0.707 level is kind of like a pivotal point for the upside move or a continuation on a full retracement, that makes for it to become a very strong stop loss. And this is what I was talking about. We would identify the stop loss for entering along the 0.618 level. But go ahead and look at this. If we look at this retracement right here, going from relative high to the relative low right here, if you were to go ahead and play the reactionary bounce between the 0.618 and the 0.70 and the 0.382, taking that entry at the 0.618, where you can identify that stop loss is actually at the 0.707 level. If it does break above the 0.707 level, very strong opportunity for it to continue to the 1 level. And that is why it acts as such a great stop loss. And what I mean by stop loss, it's not just a simple wick that you're looking for it to break above. If you can get an entire candlestick close above this level, that is when you would stop out. So basically what you're doing is you're entering on the 0.618 with your price target at the 0.382, and the 0.707 would be your stop loss. So since these proportions are going to be consistent, no matter what retracement you're looking at, if I just go ahead and show the risk to reward here, if you enter at the 0.618 level, set a stop at the 0.707, take profit at the 0.382 level, you'll get around a 2.5, 2.57 risk to reward ratio, which means that you only have to be correct about your conviction around 30% of your of the time to have a positive expectancy. And since there are such high probabilities of it breaking back down here, you will generally see a positive expectancy as there's probably around a greater than a 50% chance of that reactionary bounce occurring, especially when you get some additional confirmation at these levels. Between all 0.618, 0.382, and 0.707, you'll have around a risk to reward ratio of 2.57-ish between these levels. And that's just because there is these proportions that are going to be consistent. And since proportions are going to always be proportional to a move, the risk to reward ratio will always be around this 2.57 right here. So this offers for very strong risk to reward opportunities and a very tight stop loss, especially if you're playing a continuation to the far side. Like say if you're trying to play the reversal off of the 0.618 level back to the 0 level, that gives you even stronger risk to reward ratios. If I go ahead and look here, that gives you around a 6.84. And once again, since these are going to be consistent with proportions, this is going to be a consistent risk to reward ratio, and this allows for a very strong positive expectancy. And remember, you are using the 0.707 as a stop loss in the same sense that you're using it as an entry, meaning if you get a candlestick close above the 0.707, then you're stopping out. But if it's just a wick above and doesn't actually close above it, then you would not stop out of that position right then and there. But 0.707 acts as a very strong stop loss opportunity if you are entering at the 0.618 level. Here we can take another look at an example of this, of what I mean by a stop loss with the candlestick closed through the level. If I go ahead and take a look at the retracement here from left to right, relative low to relative high, if you were to enter at the 0.618 level right here, you would not actually have stopped out of the position because notice there is no candlestick closed through the level. If it's just a wick touch through the level, then you wouldn't stop out of the position. And notice we do get that reactionary bounce to the 0.382 level. And if I'm going to go ahead and go here and just take a look at the risk to reward opportunity here, you'll notice that the risk to reward ratio is going to be consistent around that 2.5, 2.6. Of course, there is going to be a little bit of variance depending on where you put those points, since it's hard to get those exact point touches. But even with a little bit of a buffer here, like say if I put a bit of a buffer on the 0.707 level, you're still getting around 1 to 2 risk to reward ratio, which means that you only have to be correct around your conviction around 30%, 33% of the time, just to break even in the long term. So if you're getting half of these correct, then you will have a positive expectancy in the long term, which is why, once again, you have a low risk, high reward opportunity here, and it allows for such a great opportunity to take a trade. Now, looking at this setup right here, if you were to go ahead and take a look, you'll see that we can go from relative high to relative low, tracking this retracement. And notice we do get those overbought conditions right here, followed by a bit of bearish divergence. And when you get that bearish divergence, that of course is going to tell you that there's very likely to be a reversal. Now, you could take the trade to the downside at the 0.618 level and play that for a reversal downward, either to the 0.382 level or to the 0 level, and set your stop loss with a candlestick close above the 0.707. Notice we did get a wick touch right here, but since we did not see a candlestick close above the 0.707, you would not have stopped out of the position and you would have profited nicely on this move to the downside. But anyway, guys, that pretty much is the 0.707 level. It acts as either a pivotal point where you can, if we get a candlestick close above the level, we could see a move to the 1 level. But also, since it does act as that pivotal point, where if we get a candlestick close, it will continue through the level. If it does not get a candlestick close through the level, it makes for such a great stop loss, which allows for tight risk, high reward. So very strong opportunity here for when you're playing reversals is to use the 0.707 as a stop loss, or if you're playing continuations through the level, just wait for the candlestick close above the level and play that to the upside in a situation like this.